A company code is an independent accounting entity, the smallest organizational element for which a complete self-contained set of accounts can be drawn up. An example of a company code is a company within a corporate group. A company code has a unique 4-character key which can be alphanumeric. General ledger accounting is kept at the company code level. It is used to create the legally required balance sheets and profit and loss statements for the company code. The company code must be specified for every financial transaction in SAP ERP. This is done either manually or by deriving the company code from other data elements. The IDES enterprise serves as a sample group. IDES operates worldwide and has subsidiaries in North America, Europe, and Asia. Each affiliate company code is a legal entity that is required by law to provide financial records according to country-specific regulations.
The affiliates of IDES are set up as company codes in the SAP ERP system and are uniquely identified by 4-character codes. Each company code has a local currency. The local currency of IDES AG is euros. Amounts posted in foreign currencies are automatically converted to the local currency. Note: affiliated group, that is IDES International, and corresponding subgroups, that is IDES North America and so on, are not set as accounting entities. Consolidated financial statements of the group will be created by companies in a subsequent step. Companies are used as a basis for consolidation functions. A company can contain one or more company codes. The usage of companies is part of preparation for consolidation.
Many companies not only have to create reports according to one specific accounting principle, but also need to meet different information requirements, such as country-specific requirements, corporate group standards, and so on. This means that financial statements have to be created, for example, according to local accounting standards like US Generally Accepted Accounting Principles or GAAP, or the German Commercial Code HGB, and the International Financial Reporting Standards or IFRS. The accounts approach is widely used in this context. Different valuation approaches post to different accounts only in cases of differences between the principles for topics like valuation, depreciation, or accruals. When financial statements are created, the financial statement version is used to evaluate the relevant accounts. For example, financial statements according to US GAAP only take into account those accounts that follow this accounting principle.
As of SAP ERP, new General Ledger Accounting is available. It allows you within General Ledger Accounting to manage multiple general ledgers in parallel and in this way create different financial statements. Ledger approach. In new General Ledger Accounting, one ledger has the role of leading ledger. However, as previously in older releases, you can still manage accounts in parallel using additional accounts, that is accounts approach, despite new General Ledger Accounting. In this case, there is only exactly one ledger in new General Ledger Accounting, the leading ledger.
In new General Ledger Accounting, profit centers can be part of financial accounting. It means that the profit center information is stored in the totals table of FI. As company codes, the profit centers function as a dimension for financial reporting. This means that financial statements can be created for profit centers as standard. In earlier releases, profit center accounting is part of controlling. The respective CO component is called enterprise controlling, profit center accounting, or ECPCA. It is still possible to use ECPCA as a controlling component in a new GL system. However, it is not recommended that both approaches to profit center accounting are used in parallel. A profit center can represent many things: an organizational unit within the company, such as a plant, a line of business, a geographical location. Remember that this is a profit area of responsibility and must not be confused with the cost center. As of SAP ERP, profit centers are not separate components, but rather an integral part of general ledger accounting itself. Unlike the other dimensions in new general ledger accounting, profit centers are still considered as master data, despite being organizational units. The segment is a new organizational unit available with the new general ledger accounting. Segments can also be used as a dimension for reporting purposes. Keyword: segment reporting in IFRS and US GAAP. The aim of segment reporting is to provide an insight into different business activities of a diversified company, provide information about the general environment. The purpose of segment reporting is to provide a better overview of a company's economic performance, improve forecasting of the potential sales and financial reserves of a company, better anticipate risks and opportunities of a company. According to international accounting principles, that is, IFRS 8, companies are obliged to provide information in their reports on the financial results of business segments or operating segments. This is conducted using the management approach, which requires that segment information from internal reporting is constructed in the same way that this information is used to make decisions on the allocation of resources to segments and to evaluate performance. According to US GAAP SFA S131, a segment is a part of the company that incurs costs, generates revenue, and has its own financial data with regard to profit and resource consumption. An ERP system enables you to save a segment in the master data of a profit center. When the posting is made to the profit center, the posting is made to the segment automatically.
Each general ledger is set up according to a chart of accounts. The chart of accounts contains the definitions of all general ledger accounts in an ordered form. The definitions consist mainly of the account number, account name, and the type of general ledger account, that is, whether the account is a profit and loss type account or a balance sheet type account. You can define an unlimited number of charts of accounts in the SAP system. Many country-specific charts of accounts are included in the standard system. For each company code, you must specify one chart of accounts for the general ledger. This chart of accounts is assigned to the company code in configuration and is referred to as its operating chart of accounts. A chart of accounts can be used by multiple company codes. This means that the general ledger accounts of these company codes have an identical structure. Before you can use an account in a company code, you have to maintain the account definition at the chart of accounts level. You then create company code specific settings, which are only valid in the company code. An example of a company code specific setting is defining the account currency. Most of the accounts in company code 1000 use the euro currency, whereas company code 3000 uses US dollars for most of its accounts. When the account currency is the local currency of the company code, one can post to that account in any currency.
The central view of the GL Master Records shows the chart of account data and the company code specific data.
Account groups are used to organize and manage a large number of GL accounts. Whenever a new GL account is created, an account group must be specified for it. Accounts with the same account group normally have similar business functions. You could, for example, have an account group for cash accounts, expense accounts, revenue accounts, other balance sheet accounts. The account groups are assigned number ranges. Via the number ranges, you can control which account numbers are permissible for cash accounts, expense accounts, and so on. Account groups also control the appearance of the company code segment of GL accounts. Account groups control the fields that are required for data entry, the fields that are optional for data entry, the fields that do not show up at all in the company code segment. Reconciliation accounts connect subsidiary ledgers with the general ledger in real time. This means that a posting to a subsidiary ledger posts to the corresponding reconciliation account in the general ledger at the same time. The subsidiary ledgers which are connected to the general ledger via reconciliation accounts are accounts payable, accounts receivable, asset accounting. A transaction figure describes the total of all postings on an account in debit or credit. One transaction figure for debit and one transaction figure for credit are always kept for each account in the SAP system. The financial statements for the company code are calculated using these transaction figures. If a general ledger account has line item display marked in its master record, one can drill down from the balance of the account to the line items and then to the documents. If using profit centers, segments, or business areas, transaction figures are also kept per profit center, segment, or business area. If you create a financial statement for the business area, the transaction figures for that specific business area are used to supply information for the financial statements. A general ledger is kept in order to provide the information needed to create a balance sheet and a profit and loss statement. These reports have to meet country-specific requirements. IDES, the name of our sample group, would need to create financial statements based on the German Commercial Code, HGB, for Company Code 1000, Germany, and based on US Generally Accepted Accounting Principles, or GAAP, for Company Code 3000, USA. To meet the various reporting requirements, various financial statement versions can be created in the SAP system. In these financial statement versions, you define exactly which accounts are to appear in which line items of the financial statement. Many financial statement versions are included in the SAP system. The IDES company codes use the following charts of accounts. INT is used by company codes 1000, 2000, 2100, 2300, and 6000. CAUS is used by company codes 3000 and 4000. CAFR is used by company code 2200. CAJP is used by company code 5000.
In the company code segment of the master record, each GL account must be assigned to an account from the country chart of the company code. This is done using the alternative account number field. Every account number from a country-specific chart of accounts can only be used once.
Not all company codes of the IDES group use the same operating chart of accounts, so a group chart of accounts, that is CONS, is used for consolidation purposes. The operating charts of accounts are assigned to this group chart in configuration.
As from SAP e-commerce for SAP R3, you can easily create and post a GL account document using a single screen transaction. The entry screen is divided into the following areas. Work templates. Here, you can select screen variants, account assignment templates, or held documents as references. A held document is a document that a user saves without posting it, with the idea that the user will complete and post the held document later. To return to the original line layout of the GL document entry table, right-click the screen and choose Reset Screen Variant. Header data. Header data applies to the whole document, such as posting date and document type. Some of the header data can be in display format only or hidden from the user via editing options. Line item information. Here, the line items of the document are entered. Information area. Here, the debit and credit balances are displayed by using a traffic light icon.
This is an overview of the GL Document Entry Enjoy screen. This is an overview of the GL Document Entry Enjoy screen.
Complex or general postings correspond to the old, more difficult standard posting transaction FB01. In the initial screen, you enter the data for the document header. Additionally, you enter the posting key and the account for the first line item. The posting key provides the system with information regarding the account type and can influence the layout of the entry screen for the line item, which will be seen in the next screen. The key driver of the layout of the entry screen for the line item is the field status group of the account that is being posted to. With the information about posting key and field status group of the account to be posted to, the detailed entry screen for the first line item is set up. When you press Enter, you proceed to the next screen. It contains amount field and additional account assignment fields for the first line item. This includes, for example, business area, cost center, or profit center. At the bottom of the second screen, you enter the posting key and account for the second line item of the posting. When you press Enter, you proceed to the third screen, which contains the amount field and additional account assignment fields for the second line item. To pass information from financial accounting to management accounting, a cost element for the expense account to be posted to must exist. A primary cost element can be created automatically when a new GL account is created. Cost or revenue elements only exist for profit and loss accounts. You can branch to the cost element from the GL master record.
Document types are used to distinguish between and order various accounting documents easily. Each document is assigned to a document type, which is entered in the document header. Document numbers are provided by the document number ranges assigned to one or more document types. Note, for GL account postings, document type SA is most often used, although other document types are possible, such as accrual or deferral documents, valuation documents, and so on. Each line item contains exactly one posting key. This instrument is used for internal control and is entered in the complex posting screen to tell the system which account type is being posted to and whether the line item is a debit or credit posting. In the Enjoy transaction, you no longer need to enter the posting key. Instead, debit or D represents posting key 40 and credit or C represents posting key 50. These posting keys appear in the document and their control functions are still relevant. In the SAP system, there are a large number of standard posting keys. Each posting key is used for posting either a debit or a credit to one account type. For postings in the general ledger, you need only two posting keys. Posting key 40 for debit items, posting key 50 for credit items. The balance display and the line item display are provided to display the account data. The line item display, that is display/change line items FBL3N, can be used only for GL accounts for which the corresponding function has been activated in the master record. The balance display, that is display/change items new FAGLL03, is always available. The balance display is an overview of the saved transaction figures of an account. In the balance display, you can display a list of the items that make up the balance by double-clicking. In turn, you can display the corresponding document from the line item list by double-clicking an item or selecting the indicator and choosing the display icon. From there, you can see the complete transaction by selecting Document Overview. Note, if an original document for the FI document saved in the SAP system exists and it was archived optically, you can display it as well.